2 months into the new year, and the big story so far, by far, has been the steepening of the yield curve and the impact that it is having on different asset classes. COVID 19 is a game changer, and people and companies and countries are looking at their supply chains and trying to bring parts of the supply chain local. And this is going to have an impact on the costs. So I'm sure we'll be hearing a lot more about inflation in the coming 5 years than what we've heard in the last 5 years. Greetings, viewers. You are watching Aman Sangha, independent financial advisor in Mississauga, Ontario. Now, for my update today for the month of Feb, as always, I'll be breaking it up into three main components. We'll start with COVID and how we stand in terms of the vaccination drive that's currently on worldwide. Then I'll be spending a bulk of my time today in the US economy and what we are seeing on the markets. And lastly, I'll be signing off by touching on the status of the Canadian housing and what we see going forward. So let's get started with COVID. Now, overall, if you look at the number of cases or you look at the number of deaths, there seems to be the numbers are headed in the right direction. Now, it could be due to lockdowns, it could be due to herd immunity, or it could be due to vaccination. We don't know yet, but we know that the numbers are headed in the right direction. Now, I mentioned vaccination because that's where a lot of this recovery is based on, is the amount of people that can be vaccinated as quickly as possible. And you can see that Israel is way ahead of the rest of the world, with majority of its population already done. And in North America, I mean, we are catching up, but we have still lots of way to go, especially here in Canada. Now, the good news is that the Johnson & Johnson vaccine was approved by the FDA yesterday, and hopefully should be improved for use in Canada as well. And because it's easy to store and it's only one dose that's required, I think it should add an impetus to this vaccination drive that we are seeing take place worldwide. And hopefully by I think midsummer, majority of these countries should be able, or at least in North America, we should be able to push this up number high to as close as 200%. Now, with that, I want to move on to my next topic, which was the U.S. economy and financial markets, the U.S. financial markets. The big news from US last week coming out was the 1.9 trillion package that was passed by the US Congress. Now, this is on top of the 900 billion that was passed back in December. And it's just huge in terms of the impact that this amount of cash is going to have when it hits the economy. Now, it is to the point that it's now being estimated that it's being openly discussed that it could possibly end up overheating the economy. Now, having said that, the US economy still needs help. The labor market still needs help, especially in the service sector, which have been more severely impacted by the pandemic. But this is being a problem that's being pushed on for later. But right now, the whole focus for the government is to get the economy up and running. Now, what this means is that, and this is where I started, that the interest rates have seen a steep jump in the last 2 months. Now, the Fed has still maintained that they're going to keep the rates lower for longer, but the market doesn't seem to be buying it. And what we have seen is the 10-year yield, the long-term yields, this is the 30-year yield spread, jump by almost 50 basis points in the last 2 months. And what that means is that rising rates are not good for bonds and not good for equities either. And we've seen this play out in what the results came out by the end of February. If you were a bond holder, you're not in a happy place right now. You've just extended the year to date the negative returns. And if you're in equities, the equities are still hanging on to their returns, but they have given up a lot of those gains, especially in the tech heavy NASDAQ, which saw a sell off into the final week of February. Now, having said that, this turmoil is not always bad, and I want to take a moment to highlight the value of active management. Now, you can see this that I've been speaking about this since November of 2020, that we are seeing the shift from growth to value, and this I've used MSCI World and before, and this time I'm using S&P 500, and you can see that the growth has underperformed value by the most, and the last time you kind of see this underperformance is going back to the dot-com bubble. So all I want to say is that there is always an opportunity with so many moving parts. There is some place where money is to be made, and that's what active managers do, to highlight, um, to um, to leverage those opportunities to benefit the investors, and that's what all active management is all about. With that, I want to come to my last part of my third topic, which is the Canadian housing market. And we've heard in the news that we've had a steep rise in prices. And you just have to look at the numbers that we've had. The year on year price rise in the Canadian House Price Index has surpassed the increase that we saw back in 2016-17. Now, pandemic has pushed people out of buildings from bigger cities to smaller cities, and we are seeing a steep rise in the price of single family homes. And how sustainable it is, only time will tell. But there are definitely warning signs, because if you look at the percentage of uninsured mortgages, those mortgages have, though that percentage has climbed to an all-time high. It's even surpassed the peak that we saw back in 2017, which was when the government had stepped in with macro policy measures to kind of slow down the market. So how this unfolds will be interesting to watch, but I think there would be an action from some kind of macro action if this trend continues to hold. Lastly, I just do want to recycle. This is a recycled slide. I've used this many times before, and I think I want to re-emphasize my message that in the short term, I think we have a lot of volatility. But in the long term, as vaccinations and herd immunity takes hold, um, I think that we are well positioned for a long-term economic recovery. The macro environment remains stimulative and accommodative for future growth. Now, if in within all this, if you're wondering how do I position my portfolio if you already are invested, if you're sitting on the sidelines and you want to dip your toe into the market and go all in, and you're wondering how do I get started, you know the number to call: 905-363-5035. I want to again just want to say, stay safe. We're still not out of the woods. Practice social distancing. It's the last month of winter, so spring should be around the corner. Thank you so much for watching, and bye for now.